Meghmani Finechem Limited Q4FY23 earnings conference call hosted by Emkay Global Financial Services. We have with us today Mr. Maulik Patel, Chairman and Managing Director, Mr. Kaushal Sopkar, Managing Director, Mr. Sanjay Jain, Chief Financial Officer, Mr. Milind Koteja, Head Investor Relations, and Mr. B. Ravi, Advisor. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohan Hori from Emkay Global Financial Services. Thank you, and over to you.
Thank you, Ryan. Good evening, everyone. I would like to welcome the management and thank them for this opportunity. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
Thank you, Rohan. Good afternoon, everyone, and welcome to the call to discuss MFL's Q4 and FY23 performance. I believe you had an opportunity to view the earnings presentation that was released earlier today. FY23 has been an exciting year even after a lot of volatility for the business. The realizations for all the products were at peak at the starting of the year and have reached to a bottom kind of level by the end of the year. Even after this, our top line for the year as whole has increased by 41% to 2,196 crore. In FY23, we have commissioned various projects. We commissioned CPVC resin, epichlorohydrin, and additional capacity of caustic soda. This new and additional capacities have contributed marginally for the year as a whole and will contribute in a sizable way in FY24. The capex that we are already working on in FY24 towards additional capacity of CPVC resin and chlorotoluene and its value chain will bring volume growth in FY25. In Q4 FY23, we witnessed volume growth of 15% year-on-year and 13% on quarter-on-quarter basis. Even after realizations for all the products had cooled off, we were able to witness growth in top line on account of volume contribution from existing as well as new products commissioned in FY23. In Q4 FY23, derivatives and specialty chemical segment has contributed 38% of the top line versus 19% in Q4 FY22. Our transitions and the diversification towards derivatives and specialty chemical segment is now reflecting in numbers. Contribution from derivatives and specialty segment will keep on increasing as CPVC and ECH will contribute sizable way in FY24, and also because our all future expansions plans are towards this segment for the business. We have proposed final dividend of 25% on face value of Rs10, rupee 2.5 per equity share. All our expansion projects related to additional capacity of CPVC resin, chlorotoluene and its value chain, and R&D center are moving as per the schedule and will get commissioned within the timeline that we have specified. This will drive the growth for FY25. We are focused to do continuous expansions in high value and high growth products, strengthening our integrated complex and catering to diversify industries to bring continuous and consistent growth in the business. I now hand over to the call to Mr. Sanjay Jain, our CFO, who will take us through the financials.
Thank you, Maulik. Let me first talk about the quarterly numbers for Q4 FY23. Year-on-year, we witnessed revenue from operation growth of 13% to rupees 562 crore, backed by volume growth of 15%, despite of drop in realization Q4 for various products. Volume growth of 15% majorly coming from the commissioning of the new capacities, that is ECH and CPVC, and partially from the existing product. Otherwise, the issue is down by 23%. In line with our transition plan, derivative and specialty chemical segment contributed 38% of the revenue in Q4 24 against 19% of Q4 of last financial year. EBITDA degrew year-on-year basis on account of decrease in realization and consumption of the high-cost inventories. On year-on-year basis, there is a negative growth for PAT also on account of higher depreciation and finance expenses on account of the commission of new capacities which are commissioned mid of the financial year. On annual basis, in FY23, we grew by 41% as revenue from operations to rupees 202,188 crores, backed by high realization and volume growth of 9%. EBITDA and PAT grew in line with the revenue growth. PAT grew by 40% to rupees 353 crores. Return of capital employed stood at 32% in FY23 against 29% in FY22, and return of equity stood at 40% in FY23 versus 36% in FY22. Our net debt has decreased by rupees 112 crores to rupees 877 crores in FY23 versus rupees 989 crores in FY22. In FY23, we have redeemed the preference share of 62 crores and have outstanding at 150 crores as on March 23, compared to rupees 211 crores as on March 31, 2022. The net debt to EBITDA has improved to 1.3x in FY22 against 1.9x in FY22 on account of absolute growth in EBITDA and decrease in the debt with repayments. Net debt equity of the company also stood at 0.08x in FY23 against 1.3x in FY22. In FY23, in total, we spent 416 crores on capital expenditure. The same was 456 crores in FY22. With this, we can now open the floor for Q&A session.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Dhruv from Vaski India Fund. Please go ahead.
Hi, thanks for taking my question. Am I audible?
Yeah.
Yeah, a couple of questions from my side. So firstly, how was the performance of chlorine in this quarter, and what was the percentage that was sold via tonners? And second was, what was the margin in the caustic business for this quarter?
So in terms of chlorine, again, in this whole quarter have remained a bit negative. And considering in terms of takeoff, again, as we have increased the CPVC, the percentage of chlorine consumption in-house is around 65%. And in terms of EBITDA margin, as you would have seen, the company as a whole is around 28%. So we would avoid giving EBITDA margin product to product, but you can assume that it is in the same range between 26 to 30% put together.
Okay. So this 65% of chlorine consumed in-house also includes the one which we sell to Meghmani Organics, or that's separate?
So yes, that includes. So 65% when we say that includes the pipeline customers, which is like in-house consumption only.
Okay. So 35 was sold outside, through tonners.
Yes, that is through tonners. But as you know that we are again increasing the capacity of CPVC resin, plus entering into chlorotoluene. So we expect that when both these plants are commissioned, the 65% will move to 75, and then further products will lead this to 85%. So our target is to reach 85% consumption of chlorine in-house by in a matter of 2 to 3 years.
Got it. And ECU decline 23% is what you mentioned. So the margins in caustic business still remain in the range of 26 to 30%, or they were lower?
Yeah, it should be in that range because even the raw material prices have been cooled off. So it would be in that range.
Okay, got it. Thanks, Malik.
Yeah.
Thank you. Our next question comes from the line of Babi J from Salker Investment. Please go ahead.
Hello. For the 155 crore operating EBITDA, how much did ECH and CPVC contribute?
See, again, in terms of EBITDA, we are not sharing product to product wise. But again, in terms of ECH also and CPVC also, this would be put together would be in the range of 25 to 30%.
25 to 30% off 155 crores, correct?
155 crore. I mean, where did that number come from?
It's your operating EBITDA, right, for this quarter?
Yes, definitely. No, I'm not saying that way, because when I say 25 to 30%, that is a part of a percentage as a top line.
No, I'm interested in the EBITDA margin, not top line.
The EBITDA margin, that's what I'm saying.
No, not the EBITDA margin, the absolute EBITDA contribution out of 155 crores.
Again, we would avoid giving number-wise breakup in terms of the product-wise for the EBITDA also.
Then how to make out whether you're actually profitably selling these chemicals or not? Because it's easy to get revenues, right? It's harder to make profits out of that.
Yeah, that is right. But considering the market scenario, we believe to be in a competitive, considering that there are other various players also, it's beneficial that we don't share from the business perspective.
Understand. Were they profitable? Were they?
Yes, it is.
Did they get the profits you were expecting when you put up the plant?
Yes, what we have anticipated in that line, the profit have been in that range. Initially for a quarter or two, when you have a high inventory at that time, that particular quarter you get a bit impacted. But overall, if you look at the current raw material price and the selling price, the margin remains intact, which is in the range of 25 to 30%.
Okay, and in terms of the investments you have put up, right, for the ECG plan and the CPVC, what is your target return on investment?
So in terms of ECH and CPVC, so that stands for any product that we enter into. Our focus is on the return on capital employed, and considering the profitability that we have estimated while putting up the plant, our ROC in both the projects will be 25% or above that.
But how are you able to predict that, given that you don't have control over the prices?
See, prices, if you see in the market, that has remained in the range with the raw material prices. So if you track both the things put together, then you will see the margin has remained intact. But again, we would definitely not buy on spot and sell on spot. So again, the raw material that we have in our hand, with that lag only, there will be an impact on a margin for that particular quarter or maybe 6 months till the time inventory I have. Otherwise, on a normal basis, one can, in this particular range, 25 to 30% margin is achievable.
Understand. You said in the last call that some of the ECH contracts would come up for negotiation. How has that panned out? For those customers who are buying it from outside sources.
I didn't get it. Yeah. So we have existing in India. We are discussing with the players. We are started selling also to the big players also in contract also, and we are also doing the same contract with the European customers and the US customers. So the tank, we have invested in the infrastructure in Houston for the US market, and we also invested in Antwerp for the European market. And we have already sailed the first vessel from India, and it is almost arrived in Europe. And US, the first vessel will be sailed from the next week onwards here.
So for FY24, you mentioned ECH would start contributing significantly, right? Is that going to be exports, or what percent is going to be exports versus domestic?
So in FY23, the exports as a company put together is around 4%. And considering the ECH export that we are expecting in next year, that percentage would go somewhere around 9-10%.
So 90% of ECH you're going to sell domestically next year?
No, 10% of the company as a whole is going to export. So particular about the product,
As a whole. I'm not asking as a whole. For ECH specifically, are you going to be selling the bulk of it domestically or exports?
It's going to be mix of both. Looking at the current situation, it looks like that it would be in the range of 40-60%. So 40% would be somewhere exports and 60% domestic at current situation.
Okay, and CPVC would be 100% domestic?
Yes.
Right, and one question on caustic soda. Do you produce it in the form of liquids or flakes?
Both the forms. liquid and flakes both.
Right, but there's been quite a bit of price difference, right, between the two. I mean, the price fluctuation has been much higher for the liquid. Has it not?
Yes, the price fluctuation is higher in the liquid in the last couple of quarters, but in the solid also now the price is also, because looking at majorly from liquid to solid, only the energy cost will come into the picture, and looking at the current energy is on the higher side. Yeah, the difference is little on the higher side, yeah, compared to the previous years. Yeah.
Okay, and is there any caustic soda India imports currently, or is it all completely self-sufficient?
On the eastern side, yeah, there is a caustic soda people are importing because for the alumina business, and the western side also because of the high demand there is an import, but it's negligible quantity, yeah, compared to the demand on the western side, yeah. So there is a slight import is coming.
Okay, all right. Okay, thank you. Thank you very much.
Thank you.
Thank you. Our next question comes from the line of Dr. Amit Vora from the Homeopathic Clinic. Please go ahead.
Yeah, just a minute. Huh? Am I audible?
Yes, yes.
Yeah. So I have a question on the inventory levels. If you see last 3 years, our inventory levels have gone up from 54 in 21 to 154 in 22, and now it is 211. So can you just explain about this?
Yeah. There are a few factors which led to this increase in the inventory level in FY23 vis-a-vis FY22. The level of 154 crore has gone up to 211 crore because there are major products like ECH, CBC, which was not done FY22. The inventory of that has been there. Second thing, we have Maulik briefed that there was an export for ECH in bulk quantity. That is also under transition. That also fall under the inventory as on 31st March 2023. And little bit on since operation is increasing, the inventory pertaining to spares has also gone up little bit because overall the operation is increasing.
Okay. And what is the caustic soda realization in this quarter, last quarter of the FY23?
So caustic soda realization for Q4 FY23 is around 45,000 kind of.
45,000.
FY23.
FY23 complete or just Q4?
Q4 is 38,000. 38,000 in Q4. 38,000 Q4.
Q4 is 38,000. Okay. And the capacity utilization of caustic soda for Q4?
Yeah, on the increased capacity, it was around
78%.
78% after increasing the capacity, yeah.
4,10,000. On 4,10,000, it is 78%.
Yes.
And the cost realization is 38,000.
Yes.
Yes.
Thank you so much. That has answered my questions. Thank you so much.
Thank you. Our next question comes from the line of Janam Gilani from Swan Investments. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. So I just wanted to know what was the realization for CPVC and ECH during the quarter?
CPVC and ECH realization for the quarter. Again, see, ECH realization would be revolving somewhere around 1,20,000 to 1,25,000, and the CPVC would be somewhere around 1,50,000 to 1,60,000.
Okay. And so how is the imports from China affecting the pricing in the CPVC segment? Because I've observed that it has been increasing in the past quarter. So do you think that this will be the bottom price for CPVC, or is this further expected to go down?
Yeah, it can further go down slightly from here, but the demand is also increasing in India, so I think I don't think so it is going to be big drastic change from this current level.
Okay, so max you can say 5 to 10% decline from here?
Yeah, so it is also based on the PVC price, yeah, because PVC price is also decreasing.
Yes. That's it from my side. Thank you.
Thank you. Our next question comes from the line of Artik Joshi from B&K Securities. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, could you throw some light on our initiative in chlorotoluenes? I think we are seeing some bit of competition also coming in, a couple of more players having some concrete plants and chlorotoluenes. And the value chain, of course, as you have mentioned in the presentation. So what are the products we are targeting? What will be the application area? And is this similar to what our competitors also planning?
Yeah. Archit, this is first time in India we have started focusing on this project in India, and we have already started a construction. Almost our project is almost 60 to 70% is completed, and we are going to commission by Q4 this financial year. And chlorotoluene, if you see right now in India, it is everything is imported, and the major application is agrochemical and the pharmaceutical intermediates. And there are in the chlorotoluene and value chain, there are 100 kind of products which is there. And out of that, we have selected in the first phase around 15 kind of product and selected 4 to 5 different chemistries right now in the first phase. And that is going to be commissioned by Q4. The second phase, we are going to add further chemistry in the down the line, and that is going to be in the second phase of chlorotoluene value chain, which is we are working in the R&D center right now, which is from Ahmedabad, from our headquarters. We are going to create a new R&D center, which is there we are focusing on the second phase of chlorotoluene and value-added products. So what other our competitors and what kind of products they are coming into, we have no idea right now. Yeah. So this is our status of the project. Anything if you'd like to know about more about the chlorotoluene, you can ask questions. Yeah.
Sure, sir. Thanks for that clarification. Sir, you mentioned about chemistries that you are going to add. So could you explain what are these? Are these a little more on hydrogenation and things like that? Because I think it requires a fair bit of a complexity for us to go down in the value chain. So what are the chemistries we'll be incorporating in this entire process?
So in the first phase, as we are doing a chlorination of toluene, which is our strength, because in that majorly energy is another requirement which we already have in our existing complex. Down the line, we are going to do the further chlorination, like a photochlorination kind of product, which is mixed chemistry. And then further down the line, we are focusing on the hydrolysis and cyanation kind of product. So this is going to be in the first phase right now. Nitration and hydrogenation and the other down the line chemistry which we are not focusing in the first phase, we might think in the second phase down the line.
Understood, sir. Understood. And sir, one last question. What would be the revenue potential that you might be looking at in the first phase, and what kind of margins would this make? Would this be like a percentage margin, or we are looking at some conversion margins that we anticipate in maintaining?
Yeah. So looking at our project analysis, we as rightly said, we are doing import substitute, but at the same time, our ROC requirement of the project to go ahead with the board is around 25% ROC minimum. So on the minimum side, and that based on that, we have selected this project. And initially in the first phase, we are targeting around more than around 300 crore kind of turnover from this project.
Got it, sir. So just one question I had about the on the chemistry side. So is this the ring side or the side chain chemistry that we are planning to introduce?
So we are going to start with the ring and then followed by side chain.
Got it, sir. Thanks a lot for this clarification, sir. All the best. Thank you.
Thank you. Our next question comes from the line of Rohit Nagaraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. The first question is, so we have our capex plan, which is planned out for FY24. After that, what is the kind of capex that we are looking at in FY25 and afterwards?
So one thing, like we are starting a chlorotoluene and value chain as a first phase, as a part of value chain. That is our first phase right now we are doing. CPVC expansion, which we are doing it, that will result in 2025 in terms of the volume. And in 2026 onwards, the the chemistries which are working right now, as Milind has said, that the 75% chlorine consumption is going to happen in-house right now after chlorotoluene and the CPVC. And the further we have a plan to go up to 85% of the chlorine consumption as well as other derivatives consumption which we already have. So we are thinking which is our strength and which can increase the integrated complex of our existing product, and that kind of derivatives and the import substitute derivatives we are focusing in right now. So we have not disclosed right now, but at the right point of time we are going to disclose once the board will approve.
Right, got it. My second question is in terms of the R&D capabilities. So you talked about multiple chemistries in the initial phase and then further moving up the value chain. So what is the R&D initiative that we have taken in terms of teams, in terms of collaboration with any other universities or so? And what is our focus over the next couple of years once we start building up, once we build the R&D facility? Thank you.
Yeah. So it's a good question. We have already started focusing on this R&D of chlorotoluene value chain, I think 1 year before. And the first phase, whatever we are targeting chemistry, as we have mentioned recently, that chemistry is already done. All the chemistry project is done at the R&D level. All are completed. Now we have to execute in terms of the engineering and the site commissioning only. The second phase, we have just started a work of the chlorotoluene, and for that already the people who are experienced in the similar chemistry we are hiring right now. So we have around 20 to 25 people we are working in the R&D right now, and over a period of time we will increase the strength once our first phase was going to be commissioned. So this is just the beginning in terms of the R&D spending in terms of the specialty chemical, but this strength, this team will continuously increase towards the value-added chemistry in the chlorotoluene value chain right now. Yeah.
Sure. That's all from my side. Best of luck. Thank you.
Thank you. Our next question comes from the line of Aditya Jawar from AT Investments. Please go ahead.
Hi, I'm audible?
Yes.
Yeah. Can you give me the volume data for CPVC resins and H2O2 and CMS?
Sorry?
CPVC resin, H2O2, hydrogen peroxide and chloromethane, volume data.
So CPVC resin, volume data. See, what we can convey is that it has run at the capacity utilization of around 90%. And hydrogen peroxide we have given, right? It's somewhere around 90%, 100%, yeah. 104. So any other product that you had were talking about?
Gentlemen, the line of the participant has been dropped.
Okay.
We take our next question, which is from the line of Neeraj Manseka from White Pine Investments Management Private Limited. Please go ahead.
Yeah, I just wanted to know the volumes of hydrochlorohydrin for the quarter.
Sorry?
Volumes.
Okay. So again, in ECH, the capacity to utilization is around 40%.
Okay. And what was it in the Q3?
So Q3 it's very negligible. So it was gradually increasing, and that's where we have reached in Q4. And as Maulik earlier specified in the call that we have ready with the infra and the ship and the goods are started moving in the global market also, this number should improve from the Q1 onwards.
And as we are speaking, what will be the volume utilization for this year?
We just started the April, so I guess 31st March is something which is more reliable. So that is 40%, as I said, in ECH.
Okay. The other question I wanted to know, Manish, is on this chloromethane products that you have, downstream products. Can you share some more? How much value does India import, and do you see yourself being the only player in, say, 3-4 years from now for the chloromethane derivatives, and how much investment can go into this chemistry in the entire chloromethane derivative?
Yeah. So see, chloromethane capacity, which is right now, majorly application is a pharma segment as a solvent, and another segment is a refrigerant gas, and third is a PTFE and PTFE kind of product. So these three segments are growing. Everybody is expanding capacity. The refrigerant gas, earlier people used to manufacture R22 for the chloroform consumption. Now the new next generation gas is R32, which is consumes MDC. So now everybody started focusing the investment towards R32, and the MDC consumption will grow, which is 60% of the part of the chloromethane production. So R32 is going to be the next product globally, which can consume as a refrigerant gas. And I think existing refrigerant gas people, they are also expanding capacity in India. At the same time, the PTFE capacities also people are expanding. So the R22 consumption will remain as it is, or it will increase further in terms of as the PTFE capacity of India is increasing. And the pharmaceutical consumption was little down last couple of quarters. So it was little down, but it may increase as the normal situation will happen. And now we can see that again the pharma segment also started picking up slowly compared to last couple of quarters. So so earlier India used to import a lot MDC as well as chloroform, but now if you see, the domestic manufacturing capacities are also coming because people are planning down the line chemistry of refrigerant gas and the PTFE expansion. So and the import may reduce over a period of time in India. That's what we believe based on the current situation.
Okay. So is it likely that we'll be making R32 in say longer, slightly 2-3 years down the line?
Sorry?
Is it possible that you'll be making products like R32 from your side?
No, right now we don't have any focus to manufacture R32. Right now our focus is very clear in terms of the capex where we are going to spend. First we will reach 85% of the internal consumption of the chlorine content, and then probably we might focus on the other value chain. Yeah.
And that's a question related only. Is chlorotoluene, what was the imports of its chlorotoluene and its derivatives in the say FY22 or 23? What are the number you can share us?
So chlorotoluene, as I mentioned, one particular product is not we are going to manufacture. We are going to target, I think, 15 to 20 products line, and so it is a group of products. So it is very difficult to comment on one particular product in terms of volume.
No, I'm asking the group of products. You said that there are 15-20 products we are targeting, and there are 100 products that there are derivatives of chlorotoluene. So I wanted to know what is the imports that India does on those entire basket.
So right now we understand that as our strategy is very clear, we are targeting 50% domestic market. We will absorb because everybody would like to keep two vendors. So the import will continue, but we are targeting just a replacement of the 50% out of domestic market, and the 50% we are going to export. That is a strategy we have kept in mind in India, because in terms of volume, I would say around it is continuously increasing if you see the last 3 to 4 years data, because as a China plus one, all specialty and agrochemical companies, they are increasing their dependency on India, like all specialty chemical companies are increasing. And the new molecules, there are a lot of more opportunity they are giving to the Indian market rather than the Chinese market, So I would say the future opportunity will be more in this current set of products which we are planning to manufacture in the first phase.
Okay, I'll come back to you. Thank you very much.
Thank you. Our next question comes from the line of Hitesh Putani, an individual investor. Please go ahead.
Hi, thanks for taking my question. I just wanted to know about the ECH utilization in the current quarter, as we were expecting that with the China opening up, there would be orders coming in. So are we seeing something better on that side?
Yes. So right now, as we are saying that we have run in quarter 4 around 40% of the capacity, but the demand the China is opening up the second time. In the world, the renewable energy demand is also picking up. So the wind market is opening up very fast, and which is also major consumption for the epoxy resin. So I would say, from the quarter 1 onwards, and we have also started infrastructure in Europe and US. So that will open up, and the quarter one onwards, from this year onwards, our volume will increase from 40% onwards, quarter-on-quarter basis. Yeah.
Okay, great. And I was also looking for a better clarification. Like we have said that we are expecting to reach 5,000 crores by 2027. So I can see that we have a roadmap till 3,000 till FY25 with our new capacities coming in with the chlorotoluene and CPVC. So are we expecting to foray into something new chemistry, or are we looking to expand in toluene chemistry only?
So I think we will do both. The new chemistry as well as the toluene downstream also we will expand further. Yeah. So we are targeting both. And third, if there is opportunity in the existing product also, we will also think of the existing expansion in the existing product line also. So all three segments we are focusing to reach at 5,000 goal. Yeah.
Okay. And what was the ECU realization on our different segments? Can you bifurcate on that?
Sorry, ECU realization for?
For all the segments like chlorine and hydrogen peroxide and everything.
I won't be able to give product-wise, but the ECU caustic soda that we generally share is somewhere around 38,000 in Q4FY23.
And since we have already started the downward journey in the prices, so are we seeing further downward movement in the prices, or is there a cap that we can expect, like this won't go down from this price point?
See, again, when the 38,000 is not something which is a downward, which this looks more like a realistic kind of a situation. So in the current situation, if you see, that has happened in line with the energy prices. And considering the situation when there is a global slowdown and there is a subdued demand at this level, this price have kind of a stable out. And looking at this situation, we expect that it might be at this level or it might go up down the line.
Okay. Okay. Thank you so much for taking the questions. I'll get them in, please.
Thank you. Our next question comes from the line of Darshil Davedi from Crown Capital. Please go ahead.
Hello. Hi. Good evening, and thank you so much for taking my question. So I just wanted to ask, all our new capacities have now come in for nearly 2 quarters. So what kind of revenue jump we might be able to see in FY24?
So in FY24, again, what we would, we expect a volume growth in the range of 15 to 20%, and that will drive the value growth somewhere around 20% plus. So that is what we are expecting to happen in FY24.
Okay, sir. And because of that, our margins will remain in our 30% range, right, sir?
So margins we had earlier also specified, like since last April we are specifying that our margin would be in the range of 28% plus minus 2, and that is something which can sustain for a longer period of time. So this year or even for the coming years, 28% plus minus 2 is a sustainable margin.
Okay, so that I think helps me a lot, sir. And sir, I was sorry, the earlier participants, so our vision would be just 3,000 by FY25 and 5,000 by FY27. That is our basic vision that we are planning, sir, right, sir?
We have, we have given a long-term number. We would avoid giving a yearly kind of a guidance. What we have given is 5,000 CR by FY 2027.
Okay, sir. Thank you, sir. That helps me a lot. All the best, sir.
Thank you.
Yeah.
Thank you. Our next question comes from the line of Riya Mehta from Equatus Investments. Please go ahead.
Hello. Thank you for giving me the opportunity. My first question would be in regards to caustic soda. What is the power cost right now for us? And I think last quarter we had some high cost inventory of coal. Right now, what would be the...
Okay, coal. If you look at the power cost, the coal prices have increased by almost 30% compared to last year. And from quarter-to-quarter basis, the coal price is a little bit cooled off by 15%. And the power generation costs also move in the same line.
So almost 15% reduction.
Quarter-to-quarter, it is almost down by 14% sort of thing. In line with the coal prices.
Yeah. So normally, coal is such a inventory where we don't have a very heavy stock. People don't keep very heavy stock. Normally, it will be absorbed. Whatever the past order or something is there, it is absorbed in couple of months' time. Normally, it is started rolling. If the price is down, then we can get an advantage in 1 quarter itself.
So more or less, if we see on a quarter-on-quarter basis, our realizations have fallen to the similar extent of our reduction in power cost?
Yeah, so it is the inventory, so coal prices, in a couple of months, it is getting the realistic figure what is going on right now, in the existing market, So it is not much difference in terms of the timeline.
Okay. And in terms of ECH, what are the volumes? So you could give me the production numbers for ECH and CPVC.
In ECH, again, we can give the capacity utilization that we have done in Q4, which is
40%, I think that you have mentioned.
Yes.
And for CPVC?
CPVC, it is around 90%.
90% of the 30,000 which has been entirely commissioned.
Yes.
And in terms of the coming, so generally I think ECH cycle is on an annual basis. So is it likely to assume that the current 40% is likely to sustain with plus or minus 5 to 10% for the full year?
So, no, I think, now the export infrastructure as we have started, so there is a high possibility it will increase further from Q1 this year onwards, from 40%,
Okay. And so for caustic soda as a whole, since a lot of capacities have come on stream, what kind of demand slowdown are you seeing, if any?
Yes, normally if you see in the past, every year, like one plant of sizable caustic soda plant is easily absorbed in India. So in the current, we are still that if any new plant will come in once in a year, it will easily absorb in 1 year time. Definitely couple of quarters we find it little oversupply will be there, but eventually it will be absorbed. So that's what we see in last 5 years. Whoever has done the expansion, eventually it is absorbed in the market in 1 year time. And looking at the current expansion, all the companies, all the chemical companies and the specialty chemical companies which they are spending, irrespective of the current market scenario. So we think that the caustic consumption will easily absorb in next 6 months time,
Right. And are we seeing any dumping from China?
China will never exporter for Indian market, if you see the...
So I think last couple of quarters back, they were exporting chlorine and the chlorine prices, because of that, the caustic were down. So are we seeing the similar phenomena happening?
No, China in Indian market, they never export. Normally in India, it is coming from the Iran and the Middle East side. China is not exporting to India.
Okay, fine. I think that's it from my side.
Thank you. Our next question comes from the line of Amarnath Bhagat from Ministry of Finance of Oman. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yeah. Just 2, 3 quick questions. Just all raw material prices, whenever it is fluctuates, either go up or go down, is it a pass-through?
Yes, normally it is pass-through, but normally whatever the inventory you have to absorb. So in every product, every inventory level is different, depends on the supplier situation of that particular time. So normally it is passed through, but as I mentioned, inventory it depends on the inventory level and the product, which product and which inventory, which raw material particularly you are talking about. But normally it is passed through,
Say CPVC and ECH?
Yes, eventually it is passed through,
So pass through is majorly happening because there is a good demand for these products in the market.
Yeah, that is, if the price goes up, it is not difficult for you to pass it to the customer when the demand is supporting the price escalation.
That's right. But See, normally in some product, it will take one quarter or 2 quarters, depends on the market situation, But eventually it is passed through.
Yeah. Okay. And second thing is, see, this last year we heard a lot because of this China lockdown, their consumption came down drastically. And now from January onwards, the China has opened up, their economy is now full-fledged. Now, how do we characterize that impact on your company? Means, yes, they're opening up fully as an economic cycle. How does it impact you, either in terms of availability of your raw material or the product demand or prices of the product?
Yeah. So in China, see, definitely if there is something in China is changing, it can impact the overall part of the world, indirectly or directly. The same situation happened with in the chemical segment also, because they are majority of the chemicals, they are the biggest supplier to the world. So their internal consumption, it will not increase because they are very opportunistic in terms of the manufacturing. When they require, there is a local demand is there in the internal market, they give always a priority, and the export market they consider as a secondary market. So right now, after their new year, everybody will think that their economy will open up and will start picking up. But that's what we are not seeing as of now. But eventually it will happen, and they will reduce the dumping of the products in terms of the world market. So there is an indirect impact in India also, but thanks to the in terms of the duty protections, whatever have in some of the products, I think that will protect us in terms of the margin and in terms of the business.
And are you feeling some kind of an advantage of China plus one? Though you are not a major exporter at the moment, but are you getting a sense that there is a shifting of demand for some of the product which is generally being procured from China, and there is a tendency to procure that from India? I'm talking about the product you are dealing with.
So I would say that yes, because the two major reasons, there are over dependency of all big multinational companies in China. So they wanted to risk, they wanted to divide in the future. So more business are coming to India. So
are you getting the advantage?
Yes, indirectly the domestic consumption, as the domestic specialty chemical companies, they are expanding. Indirectly, we are getting a benefited and advantage in terms of the supplying to those companies. And like chlorotoluene is one of the examples. Second way, like US, there are Trump tax which is given in 25% duty to the Chinese manufacturing companies. So that Trump tax also indirectly helps to the Indian manufacturers to supply more to the US market. So this kind of protection also supporting for the Indian manufacturing companies. And if you see the European situations last 1 year, and even in the current times, lot of mid-sized specialty companies and lot of mid-sized chemical companies, they are struggling a lot. Even though the gas prices reduced, come back original level, but still, if you see, they are suffering because they cannot increase. Nobody is thinking of any expansion or any capex plan in the European chemical market. So all those volume people are thinking now to manufacture in India. So indirectly, because of whatever the reasons, Ukraine war or the Trump tax, or we are getting indirectly advantage as an Indian, as a chemical manufacturing hub.
The last part, thank you very much. The last part was with respect to this energy cost, whether the power and fuel cost, which is a part of your major expenditure. Now we can see the coal prices on a downtrend. Of course, in the later part it has increased. Plus other fuel expenditure also came down in the last few quarters. How does it impact your cost structure in terms of savings, or if there is saving, you can pass on to the customer this one as well?
So that is right. If you see the overall portfolio of our products, chloroalkali was the product where our dependency on the power side is very high. And that also, if you see on other derivatives where we are expanding and where we are doing capex, where the power intensity is very low in terms of compared to the chloroalkyl level. So the power dependency on the chloroalkyl side, yeah, we have little on the higher side, but that also thanks to the government of Gujarat, also they have come up with a very great policy where we can get a long-term contract with solar and renewable power where we can reduce our energy cost. So our first phase, I think we have announced a couple of quarter back, we have announced we are going to commission it, but there was a little hiccup in the Gujarat government policy, and we are going to commission by next month onwards. So that's how the new energy requirement, I don't think so anybody is going to focus in terms of the energy investment. They are going to tie up with such kind of companies who are ready to supply for a long-term contract to a company like us, and we are going to tie up with them. That's what happened in Europe, US, Japan, everywhere. People don't invest in the captive power plant. So that kind of scenario will happen in India also, and that's how the people will mitigate the risk in terms of the power cost.
Okay. So can I assume that this power cost henceforth will be a stable one and not fluctuate much like it had happened last year?
See, this is last year was, I think it was in the history, it was never happened in the before, because of the Ukraine war, the gas supply, the global energy situation is like that. If you see the current situation also, the energy, which is also not in a normal condition, I would say, not reached to back to original level of pre-COVID level yet. So yeah, situation, energy indirectly depends on the global oil price, global gas price, or whatever it is happening in the political level. But yeah, so it's a global
at your
scenario.
company level, can we assume some stability at your company level, considering you are having a long-term contract or you are planning to have a long-term contract, and I will assume the prices will be stabilized there. So in a going forward cases, if you secure a long-term power contract either from solar or wherever, then the stability of the unit cost of the power will be realistically assumed?
So, frankly speaking, like you have asked a question about the raw material situation, it is pass on or not. The same situation for the caustic soda, because caustic soda we consider power is a part of the raw material. It is not part of the utility. So whatever the power price scenario in the world depends on we have to pass on the cost in the caustic soda.
Yeah, but the caustic soda market is so volatile that actually it is a seller's buyer's market. We are seeing how the price has dropped in the recent past. So are you in a really position to dictate the price in such a fluctuating market? Or you have to accept the market price?
See, we accept the market price, but as you see in the past, when some suppliers or one capacity is coming in the new capacity is coming, so for the short period of time, this scenario will remain like this, little oversupply in India, but eventually it is absorbed.
So you will get the pricing power, you mean to say?
Eventually for one or couple of quarters, I think you feel that you don't have a pricing power, but normally it is, after a couple of quarters. And the another thing is now our entire focus, whatever we have done in the past is I think we have reached to a 1200 tons per day capacity, which is 4 lakh ton capacity. And now in the next 5 years, our strategy is very clear. We are going to focus 100% on the derivative side only.
Yeah. So value-added side where the margin will be improved, overall consolidated margin.
Yes. Like in the earlier remark, what we have mentioned, we have reached to 38% in the Q4. We have reached to 38% of our revenue will be from the derivatives rather than the chloroalkali. So eventually we are also focusing, I think next year, end of next year, you will see our more revenue will come from the derivative side. So almost we will reach at 50% level in the end of current financial year.
Then in that case, that means if we assume that much of the higher proportion of sales from the value-added services, your blended margin is supposed to be higher than what you ended in this quarter. Your ending is around 28%. So if I assume what you were just saying, then your blended margin for the next year or next year onwards is supposed to be higher than, I don't want a figure, but at least it will be higher than your Q4/23 number?
It can be, but if you see from the chloroalkali side, last 2 years our margin was very healthy because of the global scenario was like that. So, but yeah, I would say down the road, you will see our numbers and everything will be more balanced because our products will be, now we are catering to 15 to 20 kind of end users in next 3 to 4 years time. So we will not be only focused on one particular end user or one particular product. Our portfolio will be widely diversified, and our end use and application will be around 15 different segments.
And just to add to what Maulik said, in terms of the margins also, like what you said is, our margins will remain in this range, 28% plus minus 2. So worst case 25 and the best case kind of a 30. But when we are entering into this derivative products, our focus is on the ROCE, which will improve, like if compared to when we were just in chloralkali. So what we are trying to do is we are trying to bring consistency in our top line and the bottom line, like catering to 15 industries. So there is going to be one industry which might not perform that well in that particular year, but as we will be in the various industries, catering to various industries, will bring consistency, growth in top line and bottom line, also in the terms of margin and growth in ROCE.
That's really fantastic. I'm trying to understand if I consolidate what you just now say, your next 5 years, 23% revenue CAGR, you are talking about a margin of 28% to 30% on an average in this range, with an expected ROCE of an incremental capital between 25 to 30% on a consistency basis of the next 3-4 years. And that's for a chemical company is fantastic, and I can use this word fabulous. And anyway, if it is that happen, that's very good. But very, very, I can say we are dealing with the entire world chemical companies, but this is very surprising that we are hearing from an Indian company something like that. And best of luck for you. Last question, if I may allow, please.
Yeah.
How much of your material go for as an input to pharma sector on an average? Indian pharma sector.
So, to be very honest, every product line has a different sector to cater.
Yeah.
There is like if you say the chloromethane segment, they have a very high weightage on the pharma sector than the chloroalkali segment. If you see like epichlorohydrin, we will have a little pharma segment around 20%. Because as the intermediate, so every product has a different percentage level dependency in the pharma segment. So it is company as a overall. I think we need to see how much we have.
It won't be like a substantial number of the total revenue.
Yeah, but why I'm asking this question, just let me clarify that we are very clearly seeing that Indian pharma industry, especially the intermediate and the API sector, is growing or expected to grow quite rapidly because of the huge capacity they built up, and there's a clear indication that the orders are flowing to them either from China plus one or Europe plus one situation. Some of the big pharma companies are doing announcement in a big way, and I know some of them getting raw materials from you as well. So I'm trying to understand if the pharma API sector or intermediate sector are really poised for a growth for the next 4-5 years down the line, then how it is going to impact you as a raw material supplier to them?
So definitely the pharma segment, definitely it will help to absorb majority of all the products in India. But we also feel that we are diversified because agro also sector in terms of volume, there are number of companies are less, but in terms of the volume there are huge opportunity in the global situation. So not only pharma, but we are also considering a lot of new agro molecule will come in India as a toll manufacturing or custom manufacturing for the global multinational in India. So, and see different segment like B2C segment in India, Indian consumption is also increasing in the other part of the industry also. So we are not focused on one particular line, but yeah, our portfolio is going to be more diversified. Yeah.
Yes, thank you very much, Mr. Patel, and best of luck for your all the junctions, and I hope it has really been delivered. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time, we request you to restrict to one question and one follow-up question per participant. Our next question comes from the line of Rohit Nagaraj from Centrum Broking. Please go ahead.
Yeah, thanks for the follow-up. So I read somewhere that the US EPA is proposing some ban on chloromethanes. If you have heard about it, and if you can just give us any clarification on the same, how will it impact the overall chloromethanes landscape in India and probably globally? Thank you.
See, chloromethane is a product line where this is a major change people are, because it is consumed in three different segments, like pharmaceutical segment as a solvent, where I think US is not in a big way. Refrigerant gas is another application where US is big. So refrigerant application, and people are coming, earlier was different refrigerant gas was famous, because of their deadline and Montreal Protocol. People are changing the focus on R22 to R32, as I mentioned, So people are, focusing on the different gases, different time. But as a India, we believe that in India, I think we are far away from that deadline, and I don't think so till 2000. I think in 2032, I think we are going to continue with the refrigerant gas what we have right now, and gases like R32. It will continue in India. So I don't think so there is an impact on the Indian chloromethane industries because of the US situation.
Any impact globally in terms of demand-supply mismatch, and that may have repercussions across the pricing?
Global situation, yeah, it might change over a period of time because the new refrigerant gas there are new chemistry which is Europe and US, which they are adopting. They are consuming different part, like earlier used to consume chloroform more. Now they are focusing on MDC more. In the future they will focus something more on other chemistry. So yeah, it keeps changing. It is never a constant, but timing of the product in India, we feel we are far away from that, and it will not change in India. And chloromethane mostly in India, it is coming import from, not from Europe and US more. It is coming more from the China side. So I don't think so it will have a major impact in India.
Yeah, sure. That's all from my side. Just one request in terms of questions. So if the conversation is elongated further, you should restrict the number of questions so that it is fair for the other people who are in the queue. Thank you so much, and best of luck.
Thank you.
Thank you. Our next question comes from the line of Ashok Shah from LFC Securities. Please go ahead.
Thanks for taking my question. Sir, can you just guide me on are there any still anti-dumping duty protection is available? And yeah.
Anti-dumping duty is available for the CPVC resin.
Not on chlorine and caustic. Caustic.
Chlorine, there is no import in India.
Caustic.
Caustic, there was in the past, but I think the current prices is so high, so there is not duty is applicable on caustic soda right now.
So currently in a merchant market, chlorine price is in negative?
Yeah, it is negative, slightly negative. Yeah, it is.
Can you just bifurcate caustic price and chlorine price?
So in terms of when we share the ECU, that is 38,000 for Q4FY23, that considers the impact of chlorine.
So it is -8 or -9 for chlorine?
It would be somewhere around -2,000 kind of thing.
-2,000, okay. And at the salt level and the power cost, what is our actual cost of production? It comes around 25,000 approximately?
See, again, as I said earlier, we would not be able to share the product-wise the EBITDA margin, but if we consider a company as a whole, it will be in the range of 28% plus minus 2.
Production cost. I'm talking about production cost for the manufacturing of caustic.
That's what I'm saying. We won't be able to share the product-wise production cost.
Okay. Thank you. And chloromethane, does the price has gone up or it's down due to import?
So chloromethane's price has almost in Q4 has marginally dropped by say somewhere around 10%.
Okay. Thank you, sir. Thank you. That's all from my side.
Thank you. Our next question comes from the line of Aditya Devat from AK Investments. Please go ahead.
Hi, I need an H2O2 pricing and famous prices realization for this quarter.
Sorry, which realization?
H2O2, hydrogen peroxide and chloromethane.
So again, H2O2 realization would be somewhere around 27,000 kind of thing.
And chloromethane?
Chloromethane would be somewhere around 45,000 kind of thing.
Okay. And the final question regarding the CPVC. What gives the management the confidence that currently your capacity is 30,000 tons per annum. Now we are increasing to approx 45,000 tons per annum. And in this quarter, I think it is above expectation 90% capacity utilization for chloromethane. And what is the demand scenario and what gives the confidence to increase that in within a 1 year?
So you mean to say why we are expanding the CPVC resin capacity?
Yes. What gives the confidence here?
Yeah, because India is a net importer. People are importing from other part of the world, and the demand is growing in India. So we think this is the right product to expand in India, and we have almost reached to 90%. So we feel this is very easy to absorb in the market also. That's why we are expanding.
Okay. Any further expansion also you have in the mind, or is the first phase and you'll evaluate after that?
So whenever we expand, first we try to optimize that particular plant and then we decide the next phase of growth and next phase of expansion. So currently, based on the first phase, we have expanded CPVC, and now the next phase of CPVC, once we reach to 90%, we will announce further if there is at that point of time, if there is a possibility to expand, yeah.
Okay. Thanks. That's all from me.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session. I now hand the conference over to the management for closing remarks.
In conclusion, I would like to convey that MFL team is geared up for the continuous and consistent growth in the business. We are focused to enter into high value and high growth products, strengthen our integrated complex, generate good ROCE for the business, and increasing revenue contribution from derivatives and specialty chemical business. I would like to thank you all for joining us here today. Please feel free to reach out to our IR team if there are still any unanswered questions. Thank you everyone for your participation.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.